Namaskar. Hello and welcome to PGurus channel. I'm your host Sree Iyer. I have a brand new guest today with me, Shreyas Chityala. Shreyas, namaskar and welcome to PGurus channel.
Namaskar, pleasure to be here.
So Shreyas is a venture capitalist. He specializes in cryptocurrencies, crypto anything, Bitcoin, blockchain, what have you. He's a venture capitalist and he's in the Silicon Valley now, meeting up with the movers and shakers of various industries. Shreyas, first of all, thank you so much for taking time out of your schedule to talk to us. Talk to us a little bit about the venture capital environment, how things are going, and how do you see this thing this year versus the last time you came to the Valley?
Thank you. Pleasure to be here on the channel. I think we are back to boom times. This was somewhat expected with the Bitcoin halving in the offing very shortly, actually coming in the next month. So I guess two sides of the market. With venture, you saw a period of significant decline in 2022 and going into 23 when we had almost 15 years of zero interest rate policy driving up valuations. There was no real reason for companies to exit. You had larger and larger funds coming in and taking out positions in the cap tables to be able to generate some of these crazy returns, but there were no exits. That has a significant correction. And so you're seeing companies now getting back to focus on profitability. You still have a lot of activity at early stage, but the threshold to invest is greater. And then ChatGPT and OpenAI came. And so you've now got this new frothy environment and this craze. And so that's going to generate a whole set of disparate outcomes, but there's excitement. That's the venture side of the industry. Now on crypto, I think it was quite significant that now Sam Bankman-Fried is just about to get sentenced. FTX was a big fallout. However, most of the people that invested in the company itself are going to be made whole. And CZ with Binance also, he received, for the charges that were leveled at him, relatively small punishment by way of 3 years, can't participate in any activities in the US. He's remained here, but there wasn't significant consequence. So which shows that there's actually some level of maturity in the industry, in crypto, to be able to take some significant punches with two of the arguably 3 or 4 biggest personalities driving the industry being dethroned from the companies that they were running. So crypto has evolved through each of the major cycles. And each time it's been a little bit different. In the 2017 boom and bust, it was due to the ICOs. In the previous cycle, it was high correlation to markets coming back down. In November 2021 was arguably the peak. But over that time, there's been a new development. We started with Bitcoin and Ethereum, then the layer ones, and the summer of DeFi. So there has been not urgency, but use cases that have driven some of the excitement around building within the different ecosystems. Now you have almost a financial nihilism where with the meme coins, that became a thing that happened with 𝗣𝗽𝗼 and with Dogecoin and 𝗏𝗏 and Shiba Inu, that there is a desire for people to invest in something. So part of it is a reaction to the feeling of people, the disenfranchisement of the younger generations, of housing costs increasing, cost of living, all of that. So there is almost this casino style mentality of saying, hey, why can't I just invest $1 to get $50? 5%, 10% rate of return just is not interesting for me anymore. Plus, it's actually, you should see there's a significant correlation to the legalization of sports betting in America. It was relatively late compared to Europe, Australia, and others. But because of these disparate outcomes and the desire to make a lot from betting a little, that has driven the mentality to participate in these systems like sports betting and crypto. Crypto is the biggest casino. So there's a great post by one of the better minds in crypto about, and I'll credit him for this financial nihilism theory. His name's Travis Kling. But there's no pretension that a lot of this is going to create anything in the meantime. There's hope that it's really hope and zero interest rates and money begetting more money driving the momentum behind a lot of this. But that said, one of the secular factors is that you have the Bitcoin and soon to be Ethereum ETFs coming online. Bitcoin has already happened, and the volume that has been driven in the Bitcoin ETFs far exceeds even the most optimistic expectations. So you have the halving coming in addition to the ETFs, plus expectations of easing rate environment. Has resulted in a significant bull run. And I think that's going to continue for some time because now it's a lot easier for everyday people to participate in crypto. Now I think something like almost half the population in the US has some exposure to Bitcoin, which is unbelievable. Like, if you think of it as an asset class, I mean, how many stocks have that level of participation?
So do you think that this kind of success that Bitcoin is enjoying is holding back the introduction of central bank digital currency in the United States today, CBDC?
No, I do not believe so. I think there's going to be an evolution in this. So one of the threats or one of the fears that happened for ETFs coming in was, well, how is that going to change the ethos and climate of the people that want to build in your traditional geeks that actually are mission driven, wanting to build in this environment. But when you think about it, it's actually still a relatively small amount of total available capital or investable capital that people put. So those that don't choose to open a wallet, get a Coinbase account or a Uniswap, and then instead going into their broker and buying the ETF to gain exposure. That's still relatively small. It still makes sense from a Sharpe ratio standpoint. But specifically answering your question, I don't think the two are correlated. I think
they'll coexist. You think?
I think they will coexist. Now, a couple of years ago, a few of us had the thinking that CBDCs would increase the amount of available capital in crypto. You're seeing the ETFs do that. It's kind of an analogous situation where you have a new pool of capital that didn't previously participate in the ecosystem now coming into and providing liquidity, and because of the scarcity of supply, that's driving up the demand. I think as an evolution to that, CBDCs are a way of having more control, for central banks to have more control over how money is created, utilized, tracked. And I think that's consistent with a lot of what is happening among, going down the political path, the authoritarian societies, countries that today. I think it's a natural evolution of that. So you see facial tracking in all these places. You go to the airport and you see, when even the US, in domestic flights, you're checked in. I think it's just another evolution in that. And I think it will be just as ETFs have become an easier way to participate, I think CBDCs will become the next set of way of providing liquidity and access to capital for participating in crypto.
Thank you so much. And Shreyas, this is a new thing for many of us. And certainly for me, when you said that 40% of America is now exposed to Bitcoin in one form or the other, is news to me. I'm probably still in that other 60%. And some of my friends have been telling you should be looking at this seriously, but we're still nibbling around the edges. ETFs, I'm sorry, not Ethereum I see a value for Ethereum because it has provided a way for any other distributed ledger based apps to try and provide a way to monetize that. So Ethereum has a reason for existence. I completely buy into that. At some point, many people say, I'm not saying one way or the other, many people say that CBDC will essentially threaten the growth of Bitcoin. How do you see that?
Well, there are two different use cases, right? So Bitcoin, the original thesis was a way of being able to transact that was unrelated or uncorrelated to any central bank or any central issue.
Yeah, it is a democratized
currency. But Bitcoin is not used for transacting. It's used as a store of value. So CBDC would be an analogy. Sorry, the analogy that's more relevant is stable coins, and you've seen stable coins go from a couple of 100 million to now the market for stable coins is close to 200 billion. And that's a way of storing value, and that's the analogous way of not storing, but transacting value. So anyone that wants that, now, if you've gone through a few cycles of crypto, you usually would take profits and then park it in a stable coin as a way of being able to easier move in and out of the different assets.
Yes.
And so in that sense, Bitcoin is a store of value. Ethereum is, well, as we've seen the price increase over time, is also almost a store of value. I would, and mentioning Ethereum specifically, the analogy I would give there is something like Microsoft Windows or the Apple App Store, which has a foundational layer for other applications to build on top of. And as you have more applications building on top of that, you have the network effect of that, and so the underlying infrastructure becomes more valuable.
Thank you so much. And viewers, you would really want to watch this more than once because he has packed in a lot of information. You need to understand the reasoning behind why some of the brightest minds in the world are lining up behind, cryptocurrencies, this whole crypto ecosystem. Anybody in anything new, people are going to first, say, nah, this is not right. Wait till this happens. It's going to knock it out of the park and things like that. But I think, and I'm also warming up to this idea. I mean, I've done a fintech startup based on Ethereum, so I know the value there. So we'll wait and see how this goes. Certainly, the time has come now for the many applications that are possible based on this. And Shreyas, have a great trip. I know you're still going through some meetings and things like that. And we'll stay in touch. Hopefully, we'll be back. We'll have you back in 6 months' time or something like that.
Yes,
when we talk about how things have changed.
Absolutely. It was a pleasure to speak, and look forward to doing more of these. And it's great to be here in the center of technology.
Thank you so much. Namaskar.
Namaskar.